everyone, and welcome to the week ahead. My name is Tony Nash. Today, we are joined by Daniel Lacalle, Tracy Shuchart, and Albert Marko. Obviously, we had a big Fed meeting this week, a lot of noise, a lot of market movements around it. So I guess the main question I want to get to is, did the Fed turn the tech rally into an everything rally? Pretty dovish presser. And so we'll dig into that, and we'll look at some other central bank activity. Tracy, we'll talk about Guyana's new oil reserves, which is kind of a big move in South America. But we also want to talk about this IEA letter that that Capitol Hill sent to the IEA just today, and dig into that. And then Albert's going to talk to us about U.S. politics, kind of a Biden-Trump tie, what's going on there, and what will really break that election, that race, one way or the other. So Daniel, thank you so much for joining us. I know you are very busy and we appreciate your time. Hi, everyone. We've introduced new subscription tiers for CI Markets, more data, more insights, and more options. CI Markets uses the power of AI to help you make better trading and investment decisions. It's a perfect addition to your analysis toolbox. CI Markets Free is our first tier. It's absolutely free. No strings attached, and it does not require any credit card information. Next, we have offerings at $7.95, $14.95, and $24.95 per month. Each of these offerings includes different forecast assets for stocks, ETFs, commodities, and currencies. Go to completeintel.com to find out more and subscribe. Hope you'll join us soon. You've written a lot lately, of course, and new books and everything. But we've seen a lot about gold, U.S. markets, the ECB, and of course, the Fed was the biggest event this week. And the dots were slightly moved more hawkish, like ever so slightly moved more hawkish. But Powell seemed very, very dovish on Wednesday when he talked through the Fed meeting. So coming out of that, I mean, there are 10,000 thoughts coming out of it, but my main kind of question going into the close of the day yesterday, and this is a Thursday, so Thursday morning is, we had a tech rally that some people thought was unsustainable, whether you're a bull or a bear, really doesn't matter, but some people thought was unsustainable. But it seemed like Powell at 2:30 p.m. Eastern on Wednesday just turned. His dovishness seemed to signal to everyone that he's going to be really easy on markets. In truth, it seems to me like he's really taking a wait and see approach. When I say he, I mean they, the Fed, and really not making a commitment in the near term, but leaving the door open for cuts, and even mentioning that they're slowing the pace of asset runoff from the Fed balance sheet. So, you know these guys inside and out, Daniel, and obviously other central banks. So is that the right thing to do right now? Is, holding and kind of leaning dovish, at least vocally, is that the right thing to do? I know markets are happy, but what does that say for inflation? What does that say for other central banks? And what does that say for the global economy in general?
Thank you first very much for inviting me to this wonderful chat with these great people. I think that the problem is that the Fed wants to bake the cake and eat it. The Fed knows that it needs a landing in order to really nail down inflation and to really make the solid level of inflation below the 2% or at the 2% level. But at the same time, the Fed fears a weak market and certainly worries that if they remain too hawkish, there can be bumps in the road, as we have seen with the regional banks, etc. So the Fed has basically abandoned the tightening from the liquidity perspective by massively injecting liquidity to any event that comes up, and therefore disguising any credit risk with liquidity, as we have seen with the regional banks, but kept a sort of hawkish message on rates. But the market is seeing way ahead of that, no? And the market is basically understanding, on the one hand, that the Fed is significantly more accommodative than it should be. Second, that despite the fact that inflation is persistent, the Fed is likely to cut rates in order to try to avoid a significant contraction in credit supply and especially in demand. And at the same time, the market is seeing government spending like drunken sailors, huge deficit spending, etc. And they say, I don't even care what the Fed says, because with 2 trillion deficit a year, you're going to monetize it one way or the other in the
Right.
next few years. So people are looking ahead and buying aggressively. So as you said before, you said something that I find very interesting, which is, has the Fed made the tech rally the everything rally? I think that that's exactly what they have done. What they have basically signaled on Wednesday is to market participants to take significantly more risk at also significantly higher prices.
So this, on some level, and you guys tell me where I'm wrong here, but on some level, this kind of reminds me of 2021, where you had monetary easing, you had aggressive fiscal policy, and and inflation was transitory, right?
Hmm.
And so he discounted the readings for inflation in Jan Feb and said, they're an aberration. And it's really weird deja vu where we're almost back in 2021 in monetary policy, fiscal policy, and markets. Am I crazy in seeing that?
No, you're not. You're absolutely right. We have seen a disinflation process that was very skewed to one single event, which was energy disinflation. And Tracy will talk later about what is really going on in the energy spectrum. And that energy price disinflation was happening at the same time as the underlying supply and demand factors for energy were actually making it more bullish for energy prices, no? So they, on the one hand, have discounted an abnormal price move in energy in 2022 and 2023 as something that is going to be persistent, which it is not. And at the same time, they're becoming way too accommodative. What does that say for inflation? What it says for inflation is that the Inflation Reduction Act has perpetuated inflation. And with an election year in which the government is going to increase spending, that means the largest economic agent in the economy spending way more than demand for dollars requires, no? So obviously that is going to generate a overheating of the economy in aggregate terms, while the average citizen suffers in terms of purchasing power. So it's very much like 2021. It's misreading in inflation an element that had virtually nothing to do with the underlying factors that they were looking at. And this is the problem when a monetary entity like the Federal Reserve decides to ignore monetary aggregates. They're not looking at the decline in monetary aggregates, and they're just looking at things that create a lot of headlines but say very little about the reality of inflation. So the
what's the
risk,
most? Go ahead. Sorry.
yeah, no, the risk is that the moment, well, I mean, obviously, I haven't checked the Bloomberg screen this afternoon, but oil prices so far are up, I believe, 11% or 10% this year. I don't know. Doesn't matter. The trend, inflation is an accumulative annualized measure. So it doesn't matter if they're up 10 or if they're up 5. It matters that they're up. And the reason, and therefore the risk on headline inflation is quite significant, no?
Yeah. So in that environment, what is, in 21 and 22, one of the biggest things that people watch was nominal GDP, because
Yeah.
the deflator really made real GDP not look all that relevant given what was happening in markets. So is that what we should be watching? Is nominal GDP what we should be watching to understand where markets are headed? I mean, that's an overly simplistic question, but is that one of the key things you're looking at?
It's an important thing. I completely agree, because it reduces the perception of hard landing. But I think that the number one factor that the market is looking at is liquidity. Now, the market realized in October last year that the Fed's reduction of the balance sheet is irrelevant when you have a much larger inflow of liquidity coming from the reverse repo facility. So the market is looking at net liquidity globally and net liquidity in the United States, and is looking at the trend in money supply. And the market is basically saying, look, if we have a rising trend in money supply and liquidity is more than ample, is actually excessive, then what is likely to happen with a 2 trillion deficit this year, and probably another 2 trillion the other, is that there's going to be an even larger destruction of the purchasing power of the dollar. So basically buy anything that protects you against that destruction of the currency. And coming back to your point about nominal GDP, because nominal GDP and headline employment figures look robust, then there is the risk of a big slump in markets due to the fear of recession or the fear of the destruction of employment is very small.
Yeah, when you mentioned employment, the number of people I know who have more than one job, I mean, these are like adults, these aren't kids.
Yeah.
They're a lot. And more people have more than one job, and they're doing something extra in their spare time. So those employment data look a certain way, partly because people are, over engaged, I think, just to keep up. It's crazy. Albert, I want you to kind of take a victory lap here. You've been talking about the second wave of inflation for what, 18 months, something like that?
About that, yeah.
So is this about the timing and the magnitude that you expected?
Yeah, I mean, Powell and Yellen have done everything they can to, rally markets and boost the economy on, just on the surface. But in order to do that, you're gonna employ some inflationary policies, and we're seeing that now. Like Daniel said, oil's up. Commodities have been ripping this last week, and I don't see them coming down anytime soon. And I think going to Jerome Powell, as we were just discussing, his tune really changed when Trump was adamantly saying in the press that he was going to get rid of Powell, right? So at this point, what does Jay Powell have to care about the economy when he's obviously going to be out, and he's better suited to play ball with the Democrats at this point in time? Initially he was the only one standing in Yellen's way, but at this point, there's no reason to, if Trump's on, against you as well.
So he's on Team Yellen.
Oh
and
yeah,
Yellen's on Team
yeah,
Blue.
exactly right. Yeah.
Okay.
And you'll see tech rally for the rest of the year on and off, just purely out of, political narratives that the Yellen and Biden administration have been pushing.
Interesting.
Yeah.
Okay.
I think one of the key things that he said yesterday, besides the fact that unemployment rising, it doesn't matter. Because we're up at 3.9%, but he said that doesn't really matter because we still have strong job growth.
It affects little people, Tracy.
But right, exactly. But what I thought was really interesting when he talked about mortgage-backed securities and basically said, we haven't made a decision on running off of that balance sheet, and because that could cause premature stress in the markets. And I don't know if everybody caught that, but he said, we would like to see this happen. We would like to be able to run off that balance sheet, but we just can't right now. And so for me, that is a kind of a big yield sign.
So Are they hoping that they can bring down mortgage rates? Like, are they talking about raising MBS purchases or something?
No, they just said they would like to, it was kind of a sidebar. And I think most people didn't catch it, where he just said, we would like to run off this, but we can't because we think it's going to cause premature stress in the markets.
Yeah.
That's a direct quote. And we'd like this to happen, but it's not urgent.
Premature, anything before the election is premature.
Right.
After that's a different.
These guys know markets are delicate, right? And they know that, anything they do to stress them out is going to change that. Again, my mind is blown by how last week we were talking about NVIDIA, Microsoft, and Amazon. And this week it's everybody and everything, right? Just since Wednesday. So, Daniel, let's talk a little bit about the ECB and BOJ, if you don't mind. BOJ made a change earlier this week from a negative interest rate to a slightly 0.1% positive rate. Now they're still staying very accommodative. Ueda, the chairman there, is not a dramatic game changer. And we saw the yen weaken, actually, right? So in the move up to it, the yen strengthened slightly, but we've seen the yen weaken. So what's happening in Japan, and why so tepid?
What is happening in Japan? Japan is the future of the United States and is the present of the Euro area. Japan is showing you why it is impossible to have a normalization of policy when fiscal policy has gone through all the limits. And it's interesting because I had lots of discussions with market participants the 2 weeks prior to the BOJ decision, in which they were saying, the BOJ is going to tighten, it's going to become hawkish. And I was like, come on, how is it going to be hawkish? How is it going to be hawkish when they spend 25% of the budget only on interest expenses in a country that pays 1% for the debt? Come on, it's impossible. It's a country that is 200 and something percent, no, 270 if I'm not wrong, percent debt to GDP, that is basically unable to pay all of the massive entitlement programs. And what's the problem? The problem is that the BOJ was very comfortable throughout the very small period of time in which very loose monetary policy, very loose fiscal policy remained like the perfect solution, considering that the yen remained as a strong and solid currency. Everything went bust when the same week that everybody was talking about this, the stupidity of Liz Truss's mini budget, the yen reached a 40-year low. And then the entire deck of cards, castle of cards created by nothing monetary and fiscal policy falls. But it's impossible for the BOJ to defend the yen and at the same time to continue to supply massively yen in the system. So basically, the market initially reacted, strengthening the yen, thinking that it would be hawkish. And finally, when the news came out, realized that the BOJ cannot do anything but destroy the purchasing power of the local currency in order to maintain what is an impossibly insane fiscal and monetary policy. They cannot do anything, basically. And this is the problem that the Fed is going to find. And this is the problem that the ECB has today. The ECB today has the problem of persistent inflation, but no growth, nominal or real. Very poor employment growth and very poor wage growth, and a system that in which the real economy is 80% dependent on banking credit. So the ECB is going to cut rates despite the fact that inflation is going to remain elevated. And that, unfortunately, as Albert was mentioning right now, is denying the reality of what happened in the 80s, of what happened in 21, etc., denying the reality that you're basically fueling the fire before there has been extinguished, no?
So we're in a speculative trap, it sounds like.
Absolutely. Absolutely, it is. You're absolutely right. We are in what basically the ECB, the BOJ, and the Fed are telling you is that unlike what the narrative had mentioned, they cannot do what they are supposed to be doing, because monetary and fiscal policy are the same thing. Monetary policy doesn't happen because a bunch of crazy people decide to print money and lower rates. It's because there's a huge level of fiscal deficit that needs to be financed, no? And therefore, once you find that that a market that is so bloated and so overbought and so expensive, think about what Tracy just mentioned. The Fed says we are not going to unwind our mortgage-backed securities balance sheet because we can create ripple effects in the market. Oh, seriously? I thought that you bought extremely cheap assets that would generate a tremendous return in an up cycle. So basically what they're telling you is that what they have in the balance sheet is not just toxic assets, is that they have toxic, expensive assets, which is the same problem as the BOJ that has been buying all this bullcrap ETFs of the Nikkei in order to pump up the market, and now is unable to unwind that. In fact, it needs to continue, and this is the problem. In fact, it needs to continue purchasing them in order to not create a massive correction that would scare investors.
So do you think we'll see the ECB go into, or the Fed go into purchasing ETFs to support markets?
Absolutely. It's just a matter of time. The Japanese are the future in so many things, in demographics, in fiscal policy, in so many things. Unfortunately, all of them wrong. But yeah, they're the future.
And so China is on the precipice of that as well. If they had an open account, they would be facing very similar things to Japan. Is that fair to say?
Oh, completely. I mean, China is basically adjusting the real estate bubble the opposite way as Japan. Japan adjusted the real estate bubble through a market correction and through disinflation of the financial assets in the market. China is basically adjusting the real estate bubble by destroying the savings of the citizens that invested heavily, by the way, their savings in the commercial paper of real estate companies. People are literally in China as we speak losing all of their savings, and you're not even seeing it in any headline, because being obviously a country with currency controls and with capital controls and with the level of intervention of the government, you're not basically seeing the protests that you would have got in a country like Iceland or like Spain.
Yeah, I mean, on some level, it does de-risk their deleveraging process a little bit, right? Not a lot, but they still have to go through pain, but they don't have international investors kind of clamoring, and it just makes things, I don't know, I guess the opacity of it makes things less.
Makes it quieter.
Yeah.
You know, that's what communism helps with. You know, you basically don't see how hundreds of millions of citizens are losing all of their savings, 100% of their savings, zero, in the default of the commercial real estate companies. Well, I don't know if it's a good thing. I don't think it's a good.
Yeah. So, I mean, how does this end, Daniel? I mean, not timeframes. I'm not talking about timeframes. It could be a week, it could be 10 years. But, we look at Argentina and Milei and the stuff that he's coming in to do, and that guy just seems like he's got a massive task that he's, despite all the excitement, it's hard to see him being successful. Does something like that, like a Milei, happen in Europe, US, Japan, or do we just continue to, extend the fun tickets, meaning currency as as just a piece of paper? Do we just continue extending that for the next decade?
No, it is likely to arise in a very aggressive increase in, people call it populist. I don't know, in more radical approaches on the political side. In this European election that is about to happen, the center right may win, but the biggest rise is going to come from what they call the extreme right, or the alternative right, whatever you want to call it.
Okay.
So I think that obviously, yes, the people, and the reason why all of this is happening is that people are being told that this is the best economy ever all over the world. If you go to European countries, they're also saying what a fantastic job they're doing, and people are looking at their paycheck, and they're looking at what they spend every day, and they say, no, I don't agree. And obviously people react. Obviously what happened in Argentina was 70 years, and they reacted way too late. But I think that, yes, I think that is likely to happen. There will be some point somebody that is going to come up and say, look, this crazy fiscal and monetary policy needs to stop because we're destroying the middle class, which is the ultimate effect. No?
Yeah, so it's interesting when you talk about the statistics. This is a direct quote from Powell yesterday, and I tweeted it out. He says, it's hard to know what the real rate is or how tight policy is at any given time. So he's got 400 PhD level economists working at the Fed, okay? And he's telling me he doesn't know what the real rate is, like hourly. And so, when people are saying this is the best economy ever, all it does is reduce the credibility in what, the data that we're seeing, right? And, like my career has been in economics. I led research for one of the best economics firms out there. I don't trust any macro data out there anymore. Zero.
Yeah, and you shouldn't. And it doesn't matter. Even if you do, people don't. And the reason why people don't is because when you go to people and tell them that this is the strongest economy ever, quote unquote, Biden, and they see that they are in the worst purchasing power position ever, you can tell them whatever you want. You can have as many PhD people coming with data that tells you that you're doing well. You're looking at your day-to-day, no? And this is what is happening in Europe. It's even more, it's like, Japan is the future. Europe is the future of the United States. So it's going to, it will come, because what happens, you said, what is next? What is next is that the stock market, as Albert was saying, continues to rise. What is next is that GDP figures and employment figures continue to show robust economies. And what happens is that people get angry because it's not true, because the real economy, because small and medium enterprises, which are the backbone of any economy, are suffering because people, as you have very well said, have to have multiple jobs. I mean, the Euro area is saying that they have the lowest unemployment in decades, with 1 out of every 10 jobs being somebody that has another job. So, what we call multi-employment, no? So every 10 people, the next one is one of the other previous 9 that has 2 jobs. That's insane.
It's insane.
Especially when you are in an economic area that has prided itself in allegedly implementing policies for the average citizen. This is the key thing. Okay, so people say, what? You feel cheated, and rightly so.
Yep. This is fascinating. It's a little bit depressing, but it's fascinating. let's move on to, thank you, Daniel, so much for that. Very thoughtful. Let's move on to energy. And Tracy, there's some news out, two things we want to talk about. First is Guyana's new oil reserves, and then this IEA letter. Let's cover the Guyana one, fairly quickly. Exxon announced a new discovery of offshore Guyana this week, which actually is pretty exciting. Can you tell us a bit about it? Is it a game changer for Guyana, and what impact does it have on global supply?
Well, Guyana's already been kind of a game changer for the offshore industry, and particularly for that country. It's raised that country's level of economic income tenfold in a very short period of time. Wow. They're experiencing drastic changes within the country in a relatively short time period. It's a fantastic oil discovery. Does that change the balance of global markets? No, we're probably still going to be in a deficit. But it is, an excellent find. What's really interesting about kind of this find is that in that area, we have Chevron and Exxon kind of have been head to head and having this competition here. And so that was kind of a blow to Exxon. But, again, it was a fantastic discovery. I really like offshore right now because that's where kind of the bigger finds are happening as we see kind of, tier 1 acreage in shale kind of dissipate. And problems obviously in the West against oil discoveries. But so yeah, fantastic find, been fantastic for the country. Do I think that this will, incite Venezuela more? No, it's kind of outside of that zone.
It is.
I also think Venezuela has its own internal problems right now, an election coming up, and I think, they just don't have a standing military that's really going to go in and fight Guyana. And we have to remember this is a 120-year-old dispute on this territory. So,
yeah, but a month ago, everyone told me Venezuela was invading Guyana.
I know, but we also have, you have the
Albert
British.
Didn't.
You have the British Navy there. Well, I didn't. I said you have the
You
British.
didn't, right?
You have the British Navy there. You also have the U.S. Air Force there protecting their assets. And so, and the British Navy being there because Guyana is a Commonwealth nation. So, they're fairly protected by the West at this point.
Okay. Tracy, where would that Gulf or where would that crude go? Will that likely go to the U.S. Gulf Coast?
That could go anywhere. I mean,
Okay.
globally, as far as, what it is, it certainly will help the US because it's a little bit heavier crude. We need heavier crude. That would be nice, but, they'll export that globally.
If it goes to the Gulf Coast, does the Gulf Coast have the capacity to take 1.4 million barrels a day?
Well, we could, but we're not going to, right? We're not going to take all that. That'll be distributed globally like any.
Okay, great. Okay, very good. Now there's a little bit of fireworks with this IEA letter, and you tweeted about it, and I want to hear about it because you were pretty excited about it this morning. Can you give us some background on this IEA letter? Why is it out, and what are you looking for in the next, say, month or so on this?
What I think is very interesting, and what I have pointed out since 2016, when the IEA kind of joined up with the WEF and got on board with the Paris Climate Accord and got a lot of money from the EU, that they sort of changed their tune, and everything was about energy transition, and they were trying to push this energy transition. What I find really interesting is that we had US lawmakers from not only the Senate Committee on Energy and Natural Resources, but also the House Committee on Energy and Commerce sent a scathing letter to the IEA yesterday. And basically, in a nutshell, it said, we want to argue that the IEA has been undermining energy security by discouraging sufficient investment in energy supplies, specifically in fossil fuels. And it should disturb people that parties are exploiting the IEA's forecasts to advocate policies that undermine energy security globally. It's kind of what it was in a nutshell. And then it kind of asked them, we want to know how much money has the US given you over the last 10 years?
Right.
And I think, you know, what's really interesting about this is that it's kind of in light when we're starting to see this pendulum swing and this pushback against ESG policy in general, right? We've seen a lot of big companies exit the ESG banking alliance, such as Vanguard. We've seen the ESG insurance alliance basically disband. We're starting to see a lot of pushback. So it's really interesting to me that we've seen a joint congressional letter to the IEA saying, you know, what is going on here? And it was 6 pages long. The first two were kind of scathing, and then the last four were basically questions. Here are the questions that we have for you, and we expect an answer as soon as possible. So, you know, I think it's just, you know, it's indicative of this recent kind of pendulum swing against ESG and asking legitimate questions, honestly. And I have it on my Twitter feed if you want to, you know, I have the entire letter. You can click on my Twitter feed to read the whole thing.
Great. How do IEA forecasts endanger energy security?
IEA, to be quite frank, pulls numbers out of their ass. I mean, we all know that none of their expectations have come to fruition. They've been, you know, their ideology, it's ideology. That's all it's based on. And none of their forecasts have come close to even remotely true. I mean, by now we were supposed to be at 50% EVs globally. We're not even close to that. We're under 10% in the US alone. So, you know, they kind of sold themselves out when they started getting paid by the people that are paying them to forecast things they want to come to fruition, but are not.
So it's sponsored research.
Right. In my opinion, yes, it's a, you know, it was once
I've
just
spent my life in research and
a think tank, and now they're paid by
Right.
the WEF, and they're paid by everybody that has an agenda to come up with the data that sounds like what they want it to sound like.
right, exactly. So will anything happen? I mean, it's great to have a scathing letter, but this is a multilateral agency. Will anything happen?
Well, likely not, but you know, but it's good that it's out there, and it's, you know, it's good that it's out there. I want to see if the IEA either ignores it or goes on the defensive and actually answers. Now, if they actually answer, then that tells us something. That tells us that they're on the defensive and they know that their research is materially biased.
Okay.
Right.
Here's what I don't understand, and I'd like all you guys to chime in this. So the EU has heavily funded the IEA, and it's, you know, got this slant toward you know, green energy or whatever. And Europe has subsidized solar and wind and all sorts of alternative energy for well, really since 2008-9 in a big way in the wake of the financial crisis. But they don't really benefit all that much, right? I mean, you have a couple of wind turbine companies, but most of that money goes to China. So why are the Europeans supporting this if it doesn't benefit their home economy all that much? I could never understand that. Daniel, do you know why?
Unfortunately, I do.
Okay.
It's the only thing that makes sense, if you put all the things that the European Union is doing in terms of energy policy, and you come back to the point that you say that on the one hand, energy prices are more expensive. Number two, competitiveness is worsening. And number three, most of the funding is going outside of Europe. The only thing that squares the circle in order to justify it is the destruction of demand. And if you look at the 2030 agenda, the way that they have adopted that agenda, which is a lot of sort of, you know, flowers and music type of messages, but if the way that they have adopted it is by always squaring the circle with repression of demand, no? So so the problem is that you're absolutely right. The problem is that it doesn't work also. I mean, think about this. Germany, after spending $500 billion in subsidies to solar, shuts down the nuclear terminals and when they're in the middle of the largest energy crisis in their history, decide to shut down the remaining nuclear terminals, which is insane. Nobody on earth would decide to do that. It's doubling down no matter what. But what happens is after $500 billion of subsidies is that today the energy mix of Germany is almost 40% fossil fuels. And now they've had to do something so ludicrous. It's almost childish to say it, is that they separate coal and lignite in order for you not to see that there's a huge chunk of the energy mix that is dependence on coal after spending hundreds of billions on allegedly green policies. I mean, socialism always destroys what it intends to defend, always. And
Yep.
this is a prime example.
Yep.
Yeah, this is basically political realities in Europe where the parliaments are made up of multiple coalitions, and the left has to abide by the most socialist of socialist policies, and climate and the green agenda is the one thing that they can patch together to keep the majority in parliament, and you'll see that until the very end when Europe's economy becomes an absolute disaster, which is that, I mean, we've talked about Germany's deindustrialization and warned about their economy for almost 2 years now. You could see the path of what they were doing. And the only logical conclusion is they're going to suffer economically for it. And now BASF shuts down, Mercedes, BMW, Audi move to North America. I mean, these are obvious things, but when politicians get involved, it's a short-term agenda for them.
Yeah, they just care about their term in office.
You know what's interesting, Albert, is that in the political narrative every day here in the Euro area, what they're saying is not that the policy implemented in Germany or the policy implemented in the European Union has been a failure. What they say is that it's unfair competition from the United States because they have lower taxes. Come on.
Well, they're going to scapegoat everybody but themselves. That's like a normal thing. I mean, you go back and we're going to come back in like 10 years and Germany's energy prices are going to be so drastically higher and suffering from blackouts like Albania did in the 90s. And we're going to say, whose fault is this?
Right.
Who are you going to blame at this point?
I love it when Europeans point to America for lower taxes after what Ireland did for 20 years with their taxes. I mean, it's just silly. So, okay, great. Tracy, anything else to add on that? I want to make sure, is there anything I'm missing on Europe supporting green and I guess biasing the IEA?
No, I mean, I think that we need to look at their new carbon tax on imports on LNG. That's another thing that you should keep your eye on because it's another example of them kind of shooting themselves in the foot because they're going to impose their carbon, what is going on in their carbon industry domestically and impose that on anybody they're importing from, which is going to cause major problems because it's saying you have to adhere to our rules if we're importing your energy. It doesn't matter from whatever country. And that's going to cause huge problems for the United States. It's going to cause huge problems for China. It's going to cause huge problems all around because these companies are going to get imports and they could turn around and say that, it's just too expensive to export to you guys. We'll send it elsewhere. There's demand elsewhere. So,
ultimately, we'll end up having some sort of bilateral agreement where they agree to only import from certain, say Qatar or something without those taxes because Qatar will buy a bunch of their debt or something like that. Who knows?
Yeah, you're gonna have, I mean, you're gonna have to find some sort of other agreements if you're gonna stick to this. Otherwise, you're gonna have to, set against this. And, there's a lot of backlash within the country of particularly manufacturing firms that use a lot of energy.
Yep.
So,
Yep. Wow. Okay. That'll be interesting to see. When we hear about that response to the letter, we'd love to hear more about it, Tracy. Thanks for that.
well, definitely be back on that one.
Awesome, of course. Albert, let's talk about the US election for a while. You posted a tweet about the US election yesterday saying the Electoral College would be a tie if the election were held. And that's changed. You changed it today to a slight win for Biden. But the race is pretty tight. Is it usually, just a couple questions, is it usually this tight this early when you have an incumbent, first of all? And second of all, are the Biden people worried, or do they think everything's fine?
Well, I mean, it normally wouldn't be this tight, but I mean, the reality is the economy's not in a good place. Unemployment's certainly in a difficult place. Immigration, inflation issues are, hampering Biden right now. It shouldn't be this close if everything they're saying was accurate, but
Right.
obviously it's not. The Biden administration should be worried. I mean, they, those maps that I put up, and I think you're going to put them up on here, but those don't include a couple of states that are still outstanding, right? Michigan added 700,000 voters to the voter base since 2020. That doesn't really look good for Trump, to be honest with you. I mean,
Really?
most of them are going to be Democrats, right?
Really?
So,
Okay.
Yeah, they have a big machine, and you got to remember the migration from the northern states, specifically Michigan and Pennsylvania, from conservatives came down to Florida, Georgia, Texas, so on and so forth. So you had an exodus of quite a lot of conservatives, right? The other issue I see is Wisconsin. They didn't add anybody to their voter rolls, and the reality of them getting Saddam Hussein type 95% turnout, like in 2020, is pretty low. To be honest with you, I don't think you'll ever see that again. That actually bodes well for Trump. So when you look at those states, right, and you have Pennsylvania outstanding, Georgia probably goes back to Trump. You also have Arizona outstanding. I mean, Pennsylvania, I don't see Trump winning Pennsylvania, to be realistic. But if he wins Wisconsin and he wins Arizona, he'll end up winning the election. So I'm sure that the Biden administration are going to go, all out on immigration and inflation in the coming 6 months. I mean, they have to, because immigration is a massive issue in Arizona right now.
Okay, so let's get to those topics. So immigration, and tell me if I'm wrong here, the top three things that it seems to me people are talking about is immigration, inflation, and abortion. Are
That's right.
those the three topics that will get people out to vote?
Oh, absolutely, especially inflation, right? I mean, like Daniel was saying, like it all comes back to somebody's wallet, what they
Right.
see coming in and out every single day and how they're going to pay bills. That's the reality. People vote with their wallets before they vote with anything else, right? Now you do have the younger voters that, they don't care. They're, on mommy and daddy's bill and in college, and, think that, abortion is the biggest thing since whatever, and I don't want to sit there and put them down because that's their, key issue and whatnot. But if you can't pay your bills and you can't support your family, that's definitely going to take precedence over anything else.
Right. How big of an issue is immigration? Because, I think sitting here in Texas, I mean, we're right on the border, and so we hear about it all the time. But nationwide, how big of an issue is it?
It's a huge issue. And I'll point something out, right? Tyson Farms ended up closing a factory in, I forgot what town in Iowa, right? The whole town has 8,000 people in it. They just dropped 1,200 jobs. Devastating, right? So what do? Tyson goes into New York and has a job fair for migrants so they can pay a minimum wage, right? And to make up all those workers and maybe bring them to that factory or somewhere else. So immigration is certainly going to be an issue, especially in the competitive job market, when migrants will work for less than Americans. That's just the simple reality of it. So all these people that you see with 2 jobs and 3 jobs, Tony, are going to end up seeing their hours cut back in the coming years.
Seeing their what come back?
Their hours, their job
Okay.
hours, they're
Okay.
going to be cut back. I mean, wow, if you're a bakery or whatever company that you have, and you can pick up one of these migrant workers that are here for a year or 2 legally for minimum wage, why would you not do that? I mean, you got to make up the margins. That's the reality of it.
Do you think, with the raised visibility, do you think the administration will slow down immigration going into the election, or do you think they're just going to keep, open doors, just keep things moving?
I think they'll make some headlines, not actual policy, but something that the media will just take and run with and say, oh, look, the Republicans have stalled whatever funding, and they're the problem of immigration. So come on, I mean, the immigration
Right.
and the border security is specifically an executive privilege. So, I don't think it'll go anywhere, but they'll try. For 100%, they'll try.
Okay, speaking of that, there was a court case where Texas won against the Biden administration this week, saying that they can apprehend and deport illegals in Texas. How successful do you think Texas will be?
Texas is Texas is Texas, man. Like they're
Yes, it
certainly
is.
they're certainly going to try. There's no question about that. I think it'll end up being like a financial issue at some point, because that's not free. Right.
Nope.
And on top of that, there's complexities of who's going to take them. I mean, you can't just dump them into the deserts of Mexico. Mexico has to agree in some form or fashion to accept these, these immigrants. And some of them aren't even Mexicans. So where do you send them to? Do you put them on a plane to, Honduras? I don't know. I mean, there's a lot of logistical complexities involved with all that.
Interesting. Okay. Now, I also saw something on Trump's fundraising earlier this week, and it didn't look good. I honestly, Albert, don't remember the specifics, but are there concerns about his ability to raise funds, and how would that affect his campaign?
No, I don't think there's really any. I don't. Who knows what super PACs and PACs and whatever else have money in the war chest at the moment, and what donors are lining up behind Trump, because you just don't know. I mean, if the numbers look beneficial for Trump, then all sorts of corporations will pile in to help him just to gain favor. So I won't even take that seriously, to be honest with you, until maybe end of July or August.
Okay. Daniel, I'm curious about the US election from a European perspective, because, the president of the US affects the world, right? And so how do Europeans view this election? And I'm not asking you to speak on behalf of all Europeans, but just in general, how is it viewed from Europe?
It's viewed with surprise, because one would imagine that with the headlines that the average European citizen receives out of the United States, the Biden administration would win with a landslide. No, so all of the little details that we have been discussing are lost to the average European citizen. The other thing is that in Europe, the center-right parties are actually closer to the Democrats than to the Republicans. And the center-left parties are also close to the Democrats. So in general, what tends to happen, basically, at least that I remember since Reagan, is that all the mainstream parties prefer a Democrat president than a Republican president. Although, interestingly enough, the European Union has fared better with Republican presidents than with Democrat presidents, because
How so?
Well, basically because Republican presidents tend to behave more and take more action on things at home, and just basically don't fiddle about with the European Union, etc. But Democrat presidents tend to be very much about imposing a global new order, things like that, etc. So Obama was a very bad president for the European Union, and certainly Biden is being a very bad president for the European Union. And Trump is perceived as a very bad president for the European Union, but the reality is that, except for the beginning of a tariff war that ended in nothing, everything was pretty much average. But in general, people look at it more from an ideological than economic perspective, and they do see Trump as a polarizing figure that tends to create very aggressive headlines that may or not come true afterwards. But and interestingly enough, when you look at the European Union, in the next European Union elections, the center-right party is likely to win the elections. But the one that is going to rise the fastest is the alternative right. And that is definitely more, let's say, leaning toward a Republican president, and certainly Trump, than to a Democrat president. So the mainstream will prefer, certainly, a Democratic party president, and the alternative right will prefer a Republican, the Republican candidate.
Okay.
It's difficult because the Europeans view the Democrats as more European-like in mannerisms and policies and so on and so forth. And the Republicans have always been viewed as nationalistic and we're the best, and it really rubs Europeans the wrong way, which I understand. Don't get me wrong, I totally understand that. It's just I really think that's more about the Republicans' lack of outreach over the past 30 years with the Europeans, right? They don't really have good relations with the Europeans. I've talked to many right-wing parties in Europe, and they have no insight into the Republican Party in DC, and that's something that has to be rectified, but that takes 20-30 years, in reality.
It does.
Yeah. What is interesting is that, for example, the Obama administration, which was hugely popular in Europe, actually generated quite a lot of negatives for the European Union, for the Germans, for the French, for the Spanish, and as well. The Italians certainly did not get along very well. But it's interesting, no? And you're absolutely right. It's because one is perceived as more inward-looking and confrontational, and the other more about all these things that everybody seems to agree.
Yeah, and let's be realistic. The State Department is full of leftists in the United States, and they're out there, going to parties, engaging with the left in Europe more often, even the right in Europe more often than anybody else. So that's how do you blame the Europeans when what they see is the State Department, right, policies and ideologies, right? That's what they see. That's what they want as an American. The State Department says, "Oh, it's perfect. The Clintons are the best. Obama's the best. Biden's the best. The Republicans are Nazis." And that's what they think. That's what they hear.
I'll tell you a story about that. So when I lived in Singapore, this was, I think it was still the Obama administration. I was at a dinner party with people from the World Bank, some diplomats, some other people. And about 2/3 of the way through the dinner, they started talking about US politics. And, I prefaced my discussion saying, well, I'm a Republican and here's what I think. And when the words "I'm a Republican" passed my lips, people audibly gasped.
Yeah.
They couldn't believe that I was a Republican and that I wasn't uneducated, inbred, Nazi, whatever, right? And so, literally, like, it's this bad. And so, the engagement with me after I said that was pretty awful. And I was my wife and I were effectively invited to leave after that was said. So, really weird. Like, and I'm not an extremist, I'm not a super kind of populist right-wingy guy. I'm more centrist in the Republican Party, but gosh, just those 3 words, "I'm a Republican," killed the conversation and really killed the dinner party.
I've lived in Europe for 10 years in my 20s. right? I've lived there, so I'm like a hybrid. I understand the Europeans really well. I've lived in multiple countries over there, and then when I mentioned that I'm Republican or conservative, they're like, "Oh, anti-immigration." I'm like, "No, it's anti-illegal immigration, as
Right.
you should be for every country." You know what I mean? But
Right.
whatever. I mean, we
Yeah,
can
my
get that
youngest son
discussion.
is an immigrant. He was born overseas. He was
My
a
parents are
foreign
immigrants.
national when he was born. So I support immigration. It's in my own family, right?
Yeah, my parents are immigrants. I didn't even speak English till I was 5 years old.
Yep.
So it's
The,
silly
the,
to
the thing about this, you see how you almost have to justify it. What on earth? The,
Right.
the Republican Party and the Democratic Party are two of the most diverse and open and parties in the world.
Yeah.
There should absolutely be no problem. You shouldn't have to justify yourself saying, or not, or you can say whatever you want, but you shouldn't have to justify yourself. The problem is that literally, in this is not a joke, people in Europe equate a Republican, a person that supports the Republican Party with a character from Yellowstone, from the what's his name, from
Flintstone.
Cosmo's
Yeah,
character.
Oh, right.
yeah.
They say, oh my God, this is the guy that goes around killing people when they're, no, it's not like that.
Yeah.
But this is because in the 2008 crisis, particularly, but between 2001 and 2008, between the Iraq War and the financial crisis, the divide between the center-right parties in Europe and the Republicans became an ocean.
Mm,
And
interesting.
and the level of propaganda that was received here regarding the Iraq War added to the level of propaganda received of the 2008 financial crisis, as everything was engineered by the Bush administration and everything, blah, 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 basically made that there is this huge divide that, as you said, Albert, will take probably decades to change.
Yeah, I'm glad you brought that up. That was one of the issues I had with the Bush administration is Iceland had gone. I mean, this is specifically the 2008 issue, the crisis and whatnot. Iceland was going through a significant economic problem at that time, right?
Yeah.
And they were literally begging the United States to help, right? And there was just no help, zero. And Iceland is a key NATO base for the U.S. military. I mean, it was conservative for all intents and purposes at that time, and they just absolutely despise the United States at this point, right? They're completely left.
Oh yeah,
as the socialist, as most socialist you can possibly get. And these are short-sighted issues by U.S. foreign policy and U.S. economic policy, not to assist smaller countries like Iceland that we could have easily have done.
great.
I mean, it's a small check.
It is a great example because Iceland went from being a predominantly conservative country in which the left was a very, very small minority to the opposite in 4 years.
That's amazing.
It's a key. It's something that should be studied if you're a conservative, or even just international relations and political economics. It should absolutely be studied. It's a key example.
I love these conversations, guys.
Interestingly, the monster so-called austerity, calling austerity in Europe is a joke, it's like calling me young. But anyway, interestingly, the austerity aggressive measures of 2009, 2010, 2011 were imposed by the Obama administration.
That's right.
Meanwhile, we were churning out money here in the US. So, guys, thank you so much for this conversation. I love this. We started with the Fed, we ended with Iceland, and we covered everything in between. So I don't think I could do it with 3 other people. So thank you so much for this. Have a great weekend. Have a great week ahead, and I can't wait to do it again. Thank you.
Thank you
So much.